It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, January 19th, 2016. Hope you guys had a great Martin Luther King Jr. holiday weekend. Hope you had great weather. Hope it wasn't snowing too much. It was raining cats and dogs here in Los Angeles. We're back here for another big week, and a short week here, obviously. Monday was a holiday. I don't do my newsletter on Friday afternoon, so we got Tuesday, Wednesday, and Thursday evening. Got a lot to talk about. A lot to talk about tonight. We're going to jump right in here, starting with Crude. Crude is bearish and rotating lower off the highs of a bear channel on the way to completing the measured move, which tells us to keep selling, but today's closing price is right at the lows of the range. So we'll be looking for a bull trap, possibly to go back up to 30, and then look to sell into those buyers' failures tomorrow for the bears on the oil market. The S&P is bearish as well. We got a short-term correction up off today's lows, which means sellers are waiting for this pullback to fail, and the buyers, the bulls on the S&P, they got to hold this pullback if they want to take control for tomorrow. Very interesting chart to look at on the S&P tonight. Gold is bearish, range bound this evening. Gold really wins the award for the ugliest or the most pathetic market of the evening tonight. We're going to plan for it though. The yellow metal is bearish, range bound this evening, and our plan is to look for rotation down to the lows of the range. We got this real weird looking bear channel this evening as well, so we're going to use that along with a measured move tomorrow. You'll see what I'm talking about on gold. You might want to get the kids out of the room for that one. Euro is bullish, but we recently completed a measured move, which tells us to look for seller failures before we buy tomorrow. If you want to be a bull in the euro, and I do see the euro going higher long term, I'm a day trader, so I'm going to put together a day trading plan tomorrow. But right now, though, we do expect to see a bearish correction before this price goes higher in the euro. Got a good plan for you guys, though. I got a plan for crude, E-mini S&P, gold, and the euro. As always, it feels great to be back after a holiday weekend. I always find myself kind of wandering around the office on those holidays. You know, what am I going to do, right? I love looking at these charts. Before we jump into tonight's chart, though, I do want to remind you guys, try to have some fun with you. Want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, make sure you find that link in the description of the video. Follow that link over to our trading blog for a few reasons. First of all, I would love to invite you out to join me in the live trade room as a guest for a day, maybe 2 or 3 days. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, you can register for our nightly newsletter mailing list. All I need is your name, your email, and then check your inbox. I'm going to send you a verification email, and then every evening I'll send you a nice little email there to let you know the newsletter is ready to go. Right below the video tonight, you can download the charts in tonight's video. Follow that link right below the video on our blog, and then you can download all the charts that you see me using in tonight's video. You can have those ready for you tomorrow. On the right-hand side, you can register for our trial membership, not to be confused with the free pass. It is very, very different. You can learn more about the who, what, where, when, and why of our trading strategies on our trial membership. You can learn more about what it means to be a member here at SOT. And please don't forget, 24/7, 365, I've always got someone standing by to answer all your questions. No matter what the question is, type those questions right in, grab that live support button on the right-hand side of the blog, and we're here to help every step of the way. Moving forward here, looking at news here for tomorrow. Tomorrow's Wednesday, January the 20th. Now, one thing that stands out, we do not have the inventory report tomorrow. Don't forget, typically, every Wednesday morning is going to be the inventory number for crude. That has been pushed back to tomorrow morning, or should I say Thursday morning, because Monday was a holiday. So a relatively easy session for crude traders tomorrow. It's not going to be your typical grinding, inventory day. We have 8:30 news. Pretty much all we're going to worry about tomorrow morning. We got CPI, we got housing starts at 8:30 tomorrow morning. That's going to be nice to get that market really wound up and moving well for us tomorrow morning. I never trade 5 minutes before that news comes out. Set your alarm, 8:25 a.m. tomorrow, and trade around those major news reports. Don't forget, we do a lot of work with economic news, how to trade around it, how to plan for it with our students in our beginners course. And then again, tomorrow night at 4:30, we'll see the API number from crude, and then tomorrow, or should I say Thursday morning, we'll get that 11 o'clock petroleum status report for all you oil traders, right? So you heard it here. don't be shocked tomorrow, right, if there's a little bit of confusion over that lack of news tomorrow, but at least now you know the reality. Moving into it tomorrow, again, 8:30 news, no inventory report tomorrow. Let's jump right into the black gold. Crude oil futures were bearish and rotating lower off the highs of a bear channel on the way to completing the measured move, which tells us to keep selling, but today's closing price is smack right at the lows of this range. So we'll be looking for a bull trap up through the highs for the most reliable selling opportunities, right, in tomorrow's session. Now, we can see the big bear channel. Pretty easy to see that big bear channel. And we're trying to rotate down to the low, right? We talk about that all the time. We teach it in our intermediate course. We go from the high down to the low, tag your it, up to the high, got it, tag your it. Now the sellers have their objective to finish that rotation. We also can see a major measured move, a pretty impressive measured move they're trying to complete here, just below $29 a barrel, right? That will be the objective for the sellers, right? So two objectives for the sellers right now. The goal is finish the rotation down to the channel low, finish the measured move, then the sellers can take a break, right? We saw a couple of those today in our live trade room. Most important thing right now that I can see is again, no question about direction right now. The only question I have, though, is do I feel comfortable selling low? You know the rule of thumb for professional traders, right? The rule of thumb for everything. Sell high. Don't sell low. Sell high. Buy low. So if I use that simple rule to be my guide right now, I expect here, this little tiny range here, this reeks like a trap. Now, remember, guys, I have no way of telling the future. I can't predict the future. There's no crystal ball. There's no magic wand. All I know is what every other professional trader knows, where the most reliable trades are going to be. I miss trades all the time because I'm not going to gamble. I'm not going to guess. I'm not going to sell this low. I'm going to sell it off the low and sell it at the highest possible price. So the bottom line is, as we're going lower, I'm definitely staying to the short side right now. I wouldn't dare touch this with a buy order, at least not yet. The only way this market becomes bullish is if we push higher, hold a pullback. Then I can start thinking we're even somewhat bullish on the way higher here right now. The problem I have right now is I just can't tell you to be a seller right here, right? So what I look for here is with that little fake break of the low, usually what will happen is it'll snap higher. That's when the buyers have to come in, right? So what's going to happen is assume here, let's play that game, what if price goes higher, what if price goes lower, what if price goes higher? Well, if price goes higher, that's the best scenario for us as a bear right now. I know that sounds crazy, but the reality is now we can wait, see if the buyers hold that pullback. If the buyers can't hold that pullback, we know where their stops are going to be, and we can sell right into their stops. That's the way that you sell getting up off the low, right? I don't want to sell the low. I wait for it to go lower, then get up off that low, see if those buyers hold that pullback. If they can't, I'm getting short now with a lot of room now, right? Then we have we have this buffer zone now between where I'm getting in short and where the actual low is, okay? If price goes lower, if price pushes lower, this is going to end up being the most difficult part. If price goes lower here, what I'm going to look for is a two-legged correction off that low and basically look to rinse and repeat, right? Get it up off that low, see if those buyers fail to hold that next pullback. Again, as it keeps going lower, I'm not interested in selling that low. I want to get up off that low and sell into buyer failure, right? Sell into buyer failure. Now, heck, we might see the bulls take control tomorrow. If we do go higher here right now, the bulls hold that pullback. We'll be looking now for the completion of another measured move going higher. If you're a bull, you're definitely looking at resistance areas overhead as targets. 30.53. We have a juicy major resistance area overhead up around that 31.40. So if the bulls do hold a pullback after making that new swing high, then we can start considering to be a buyer here. 30.53, 31.41, just a hop, skip, and a jump away for those bulls. And again, look for that to be a measured move right, going back up. Again, they got to hold that pullback though if we're going to give those bulls any benefit of the doubt tomorrow. Keep on selling. Just be careful selling at that low. I've already told you what my plan is. Get it up off that low and then look for those buyer failures as it comes crashing back down, and especially if it just pushes down to these lows. If it pushes down to that low, I'm looking for a two-legged correction, and then we'll look for it, right, to come back down. All right? Don't forget, we'll be trading that market live in real time tomorrow morning starting at 8 o'clock Eastern Time. You're invited. Now, the E-mini S&P is bearish with a short-term correction up off today's low, which means sellers are waiting for this pullback to fail, and the buyers need to hold this pullback if they want to take control for tomorrow. Believe it or not, I can imagine a lot of people right now watching this chart right now, and they're seeing these big wicks. I mean, look at this thing. Is that beaming confidence in the buyers right now? It's after hours, don't get me wrong, right? So you get to discount that lower volume, but those candlesticks right there with their big wicks at the top, closing below that moving average, it is definitely not exuding any confidence for these bulls right now, right? So we know the bulls, they got to hold this pullback. The bears are just drooling over this right now, knowing where their stops are and knowing that if it fails, it's probably going to try to finish that move and retest that low again. Let's go back to our comments at the top. The bears had control for the majority of the session today until they finished the measured move, took their profit, right? We can assume this is just one big push down, right? And then this is really, in my opinion, this is just profit taking. Why do I say that? Why do I say it's just profit taking? Well, because until those buyers hold that pullback, this is just profit taking, and this is just a great selling opportunity, at least the way that I see the markets. Now, if they hold that pullback, now we look for that measured move higher, and then once those buyers finish the job off, then we can look, right, to sell it back down again. But again, this is classic. This is classic right here. Buyers try to take it. You know where their stops are going to be. Sellers are going to be attacking this, trying to revisit those lows in the overnight session. And really, it all depends on what happens right here, right now, once we open up at about 6 p.m. Eastern Time. If they can't hold this pullback, you know those sellers are going to be gunning for that 1856.40. If they do hold the pullback, then we have the foundation now in place for a measured move. Remember, if you're going to be buying, look at targets at those swing highs. Right? Resistance areas are where basically in a bullish market, the buyers are buying up to resistance, so use resistance as your target. If you're in a bearish market, the sellers are aggressively selling down to support, right? Okay, so looking for a possible pullback hold to complete a measured move higher for the bulls. If you see that measured move completed, then we look for more information. Then we look for the sellers to take over. New lower low, they hold their pullback, right? And we go right back down. If they can't hold this pullback right now, then we should see sellers attack. They should make a run at that low. And then there's this little guy hanging out here from last Friday, 1850. I see you, 1850, and that's probably going to be in the cards tomorrow if we can't hold this pullback. There is one more scenario, and that is this may end up just turning into one big trading range, right? There are lots of different variations of trending environments. This may end up being a 1, 2, 3 leg down move if they can't hold this pullback, and we'll expect sellers to push this down to 1850. Okay, another opportunity here would be it's a measured move. The buyers are trying to hold a pullback, but all we really get is for it to go back to that low, and then we rotate inside of a range with a bearish bias, right? Sell the highs of that trading range. And then, of course, you have the third scenario, which is if they hold the pullback, trending markets oftentimes finish off their measured moves. The sellers take their profit, but then the buyers step in and they hold that pullback, and we'll look for a measured move going back up to the upside, which just off the top of my head looks like we're going to be going back up towards that 1900 area. Once we get to that measured move target, then rinse and repeat. Look if the sellers can take control and then sell it back down if they can hold their next retracement, right? Rinse and repeat over and over and over again. Believe it or not, as crazy as these trending markets look right now, they all have a very well-behaved format. measured moves, channel rotations, using the pullbacks for proof. And we teach all this every day to our students. We trade it live in real time in our trade room. It really is a very powerful way to learn. So again, I've given you the 3 scenarios. Scenario 1 is going to be they can't hold the pullback and we get a third leg down to 1850. Right? Obviously, we'll be looking for targets at 1856, and then 1850s, that kind of lingering previous low of day. Scenario 2 would be we finish the measured move down, right? The buyers don't hold the pullback, but instead of completing to 1850, we end up going into a range, right? We end up going into a range. If we do end up going into a range, look to sell the high of that range because you get the bearish bias to it. And then the last scenario is if they do hold that pullback, we look for a measured move higher up to 1900. And then pretty much same thing. If they hold the next pullback, we'll look for a third push, which is rare, by the way. If we don't get the pullback to hold, that's when sellers step in, they hold that retracement, and we take it right back down. Again, 8 o'clock tomorrow morning. Come out and trade this with me tomorrow morning. You don't have to do this alone. Now, like I said, you might want to get the kids out of the room for this one. This is the most pathetic chart I've seen all year on gold. Just when I thought you had completely redeemed yourself, gold, you go doing this to us right now. What's going on here, yellow metal? Well, what feels like what's going on right now is nobody can quite tell. Should we be worried right now? Am I scared? Are we scared? Are we scared? Is this a correction in the equity markets, right? Or is this like the end of the world, like all the news media wants us to think? It's not the end of the world. Let's remind each other here real quick. The end of the world comes about every 6 weeks in the news cycle, right? So turn off the television and look at the chart. Now, this might just be the world's biggest bear flag, right? Bull flag. The magic number for a flag is 3. 1, 2, and 3. So this might be just the longest, most laziest bear flag, or bull flag, that I've ever seen. So we may be destined to shoot higher, but it doesn't look like it. We don't usually see flags last more than a day and a half. So zooming back in here right now, I look at recency is always the most important thing, and we can see here we have lower highs, we have lower lows, and honestly, this red candle is what gives me really the confidence here. This is a really tough chart. And if I had to give you one market tomorrow, if I could only trade 3 markets tomorrow, I would skip this one. This one's going to be fooling people tomorrow. I would imagine. There's a lot of really marginal patterns here right now. I did my best on this, but this is a really sloppy market. As you can see here, we're not really making lower lows anymore, right? We had a higher low and a higher high. That kind of conflicts the idea that we have these lower lows and lower highs. So it looks like a range. It feels like we're balanced, but we don't really have a well-defined range. Why do I say that? Well, a trading range needs double tops and double bottoms. We got to have some sort of proof, right, to have a trading range. I need to see some sort of acceptance of that price. Now go back to the chart and you can see, I'm guessing. I'm completely guessing that 93.4, somewhere in this area is the high of that range. Okay? It's all I have to work with right now. Now, with that said, mark up the low, copy and paste off the high. Look at the sellers responding to that channel. Like I said, I think that's the big clue. I'm trying to make sense of a market that's not giving me much to work with here tonight. So the reality is, well, in my personal trading, whenever I don't have enough to work with, I simply wait for more information. So where's the more information going to come? I think it's going to come with this pullback right now. That big, strong red candle does not make me feel very bullish. Okay? Again, it is towards the end of the session, so that may be discounted. But let's say that we are bullish right now. I think we're bearish, as you can see here. Right? Let's say we are bullish. If we are bullish, making a new higher high and higher lows, we need to hold this pullback. Again, that big red candle says, really? Really? I don't think so. Now, again, it's after hours. They may pull this out of their rear end, and we may be able to make this new high here. But even if we do make that new high, then I want to wait and see what happens up here at 93.4. I'm still going to question them at the highs of that range. Okay, so gold is bearish and range bound this evening, and our plan is to look for rotation down to the lows of the range and the lows of the bear channel this evening with a measured move target waiting below. Very similar to what we saw on the crude, right? We have that rotation target, we have that measured move target. That's the objective for the sellers. Again, today's price action was very sloppy, but with the sellers clearly responding to the highs of this kind of untested channel, we have to give them the edge. We have to give them the bias this evening. And with the buyers unable to finish the rotation back to the range high, here's another big clue. We talked about this earlier, right? Rotation. This time it's inside of a range. We go from the high down to the low, back up to the high. Give them one more shot, right? Give them one more shot. I will give them 2 tries here. Okay, so let's get back to the text here real quick. Where was I here? All right, cool. So the buyers being unable to finish that rotation back to the range highs, right, at 1093.4, we're going to look for the buyers to try one more time. If they try one more time, which makes sense, right? The moving average right here, you got to try one more time here, buyers, right? Give them one more shot to get up to that 93.4. If they can't hold this, every seller in this market is going to attack this price. Okay, so give them a second try. If they can't get back up to that range high, and again, I'm a little bit pulling straws here right now. It's tough to tell exactly where the range high is. It's going to be around that 94.5 to 93.4 area up top there. You can see that, we got some gapping from close to open. Just a real sloppy area up top there. Really difficult to find out where that high is. Okay, if they can't complete this rotation up to 93.4, you got to be a bear on this. You've really got to be a bear. So let's play that game. What if price goes higher? What if price goes lower? If price goes higher, I would expect to see somebody try to buy this thing. If price goes higher and we cannot finish the move to 93.4, now that'll be seen as buyer failure, a 2-try failure, and we're likely to see it overcorrect, finishing off that measured move and possibly, remember, the pendulum swings now, right? We swing lower. If we can't swing higher, the pendulum now is going to swing after that 2-try rule. So if we fail to push higher up to that 93.4, target measured move, target channel low, and then target this little major support level down here at 73.5. That's hanging out there left over from a few weeks ago. Now, what if price goes higher, though, and we do get to 93.4? I have to first think of this like a range. And that means, let's see, you've been watching my newsletter, what type of setups do I look for with a trading range? There's continuation setups, there's strength setups, there's failure setups, right? That's the name of the game when you look at a trading range. So let's assume now we go higher, and we do reach the high of that range. Now, first things first, wait for proof. If they hold that next pullback, now you've got proof. But I'll gladly miss that pullback trade just to be safe, because now if they fail, buyer failure at that high, you're looking to sell that range high. As you can see, this market's going to test our patience tomorrow. It's going to really test us because there's not a lot of proof yet, right? We reacted off that bear channel, but maybe we go back to the highs here. And if we do make it to the highs, I have to treat it as a range high, which means I'm looking for those buyers to fail on that next pullback. Okay? If they can hold that pullback, then we can go out and start playing this from that point forward. We'll watch it in real time tomorrow. What if they can't get back to the highs? What if we go up and we fail? Okay? That's the easy part. Okay? If they can't hold this pullback, if they fail, now we know. We're looking to sell directly into those buyers' stop losses. Targets are nice and easy waiting for us below. The range low, the measured move, the channel low, right? The major support level waiting for us down around 1074. All right, guys? Now you know the plan for the gold. Again, if you got a market you can't be trading tomorrow, this is going to be, in my opinion, if I had to guess, this is going to be the one that's going to be the hardest, just because there's not a lot of proof yet, right? My My bet is on the bear side right now, but that can all change if we make a run at that 94, 95 area overhead. And then still, at that point, we're looking to see if the buyers are going to fail and sell that range high, right? That'd be a beautiful opportunity here tomorrow. Wait for more information, though, before you go being a buyer right now on the gold. How about the euro? Wrapping up with the euro futures, the euro is bullish, but we recently completed a measured move, which tells us to look for seller failures before buying more tomorrow. Now we can see the bull channel, and we're at the lows of that channel, which normally would tell us we want to be a buyer at the low, right? We always want to buy the low of the channel, but we can also see the completed measured move, which should have the buyers taking profit. The sellers, if they're smart sellers, they should see that measured move. They should be expecting the buyers to take profit, and they should be looking for the next pullback to fail. Okay, so that completed measured move tells us we should have sellers entering the market and trying to push this price lower. So the wise buyers will be looking for a break lower and then seller failure to buy it back up to the highs. The bears need to see a break lower and then hold the next pullback if they want to take control and send price back to those lows tomorrow. Okay, so here's what we always look for. This is very typical. Again, like I said, these trending environments, they may not be exactly carbon copies of each other, but they all have the same fundamentals, right? They all have the same fundamentals. So we have our measured move going higher. I saw this as being kind of a triangle, a little bit of a flag there, right, that pushed higher. Whatever, it doesn't matter to me. It's a measured move higher, right? A, B, C, D to the tick. Now, once we have that measured move higher, we cannot buy that next pullback. Well, you can do whatever you want, but that won't be the most reliable way to do it. Remember, third legs are relatively rare, right? To get a third leg up is relatively rare. Rather than buy that next pullback, what I'd rather do is wait for sellers to try to sell this. If they fail, we can then buy into their failure. That's a lot safer way to buy here right now. Okay, so let's play that game. What if price goes higher? What if price goes lower? If price goes higher here right now, we will in effect be holding that pullback. That tells me, though, that although the bulls have our attention, again, we're 2 legs up. I got to be careful here. So what I'm going to look for is I'm going to look for sellers to try to enter the market here. They'll probably sell about 50%, right? Little Fibonacci retracement area there. It's perfectly fine by me because I know if they fail, I know where their stops are going to be. And remember, guys, one of the biggest reasons why I protect myself by using failure patterns is because if I buy into seller failure off these highs, now I have both the buyers and the sellers buying with me. Think about that. Right? Now everybody's buying with me. If I buy right now, only the buyers are on my team. If I buy into the stop losses of the sellers, now the buyers and the sellers are playing with me now. Okay? It's a more reliable opportunity. Now again, why do I care about that? Why not buy right now? Because we've already completed that 2-legged move higher. We've already completed that measured move. And although I would love to say guaranteed we're getting a third leg, the third leg higher is rare. Those third legs are rare. Usually what's going to happen is you'll get the correction lower. The sellers will try to sell that retracement. Again, put your little Fibonacci tool on here. Every day trading 101 book tells you to sell that 50% level. Good for them. We're going to buy right into their stops, and that will help shoot that price back up, possibly to a new high and a big third push higher here. Okay? That's if price goes higher. If price goes lower, pretty much the same thing. If price goes lower, this is where the sellers have a chance to take it. We go lower, this is where those sellers, they can hold that pullback, and then now you're looking for a retest back at that low. Look at all the chop and slop down here. So if these sellers, if they can hold this next, right, push lower, if they can hold that next pullback, then at least you know direction. Then we'll look for waves, we'll look for continuations, failures, and strength patterns on the way down to get back to that low. And then from there, we'll probably end up seeing a larger measured move, something like that. So we'll be able to use that for our long-term target tomorrow. But again, if price goes lower, If the sellers hold that moving average, they hold that pullback, now you know they've got control. They may not keep it, but at least that tells you they've got control and they're going to be gunning for that low right around the 8,800. Okay? What happens if they can't take it, though? And that's, of course, where the buyers come back in, right? So sellers take it lower. They try to hold that retracement. Smart buyers are waiting for them to fail, and they buy into their failure, right? Same thing as before. You're buying into seller failures, so you're buying, and the rest of the sellers are buying with you. All right, guys? Now you get a plan here. Now you get a plan for you guys. All right, so Euro, Gold, Crude, S&P. Don't say I didn't warn you for tomorrow. And again, don't forget, no inventory report tomorrow on the oil markets. That won't be until tomorrow night at 4:30 and Thursday morning at 11 o'clock. Before I let you guys go, I want to remind you all, send me some feedback. My email address is jj@schooloftrade.com. How can I make this better for you every evening? As you can tell, I work really hard at my nightly newsletter every evening, Monday through Thursday evening at 8 p.m. Eastern Time. I love your feedback. I would love a thumbs up on the YouTube video. Share the video with a friend. And don't forget, if you want to learn more about how I trade here at School of Trade and everything that it means to be a member here at SOT, grab that free trial right on the homepage. And if you have any questions about our 3 levels of membership, we've always got someone standing by on our online live support to answer all your questions. No question too big or too small. Charts, data, brokers, whatever the question may be, I want to make sure you guys know you have a resource here at SOT. Guys, thanks so much for being here. Hope you had a great weekend. We got a short week in front of us. We got to make our money. We've got one incredibly profitable day in the books today. I hope to see you again tomorrow. Open up the trade room tomorrow morning at 8 a.m. Eastern Time. We'll come back and do another newsletter again tomorrow. Be well out there. Be nice to each other. And how about those Patriots, right? Damn, they look good this week. I hate to jinx it. I hate to jinx it. I got to be honest, though. I'm a little bit scared of the Newton Express, though. Those Panthers look really, really good. I love Peyton Manning, but no offense, Peyton. I'm not worried about you next weekend. I'm a little bit more worried about the Super Bowl. I don't want to jinx it. But man, oh man, we missed you. We missed you, Danny. We missed you. Anyways, guys, be well out there. I'll see you tomorrow morning. As I said, don't forget to share this information with a friend. I'll see you next time. Adios, amigos. Bye-bye for now.